All right, we're just going to just do kind of a quick overview of problem 15-9 for governmental accounting. The two problems you have for the homework, one is just general fund journal entries, and then this problem here, which is journal entries between the general fund and the fixed asset account. So real basic stuff, since you guys have already gone through a full class on governmental accounting. So this should be just it should just all be a review for you. So hopefully it's pretty straightforward. And so so on the first one, part A, it says the general fund vouched the purchase of trucks for $80,000. The purchase had been encumbered earlier in the year for $75,000. So when something is encumbered, it's kind of like a purchase order. So that's just the government saying, hey, we've had approval to buy something. So it wants to record that just to know that those funds are spoken for. So the main difference in governmental accounting and corporate accounting is that where corporate accounting, you're trying to track profit and income and expenses. With governmental accounting, it's not about profit, it's about how are we managing and accounting for the resources we have. So it's a resource focus versus a profit focused. So an encumbrance just says, hey, we're going to spend this money, we already have it earmarked. So in this situation, they already have it encumbered for $75,000. So now what we do is the first thing is we reverse the encumbrance. So that's going to be a debit to the fund balance of the original amount of $75,000, and then reverse out the encumbrance for a credit of $75,000. So then we book the expenditure related to that. And so one thing about modified accrual in the general fund is we don't book fixed assets. We just book an expenditure. So it's not an expense, but it's just an accounting for money that we've spent. So for that, we just show a debit expenditure of $80,000 and then a voucher payable, accounts payable essentially of $80,000. Where we do show the actual fixed asset is in the fixed asset fund. So then we go over to the fixed asset fund, and that's when we book our $80,000 for machinery and equipment. And then what we want to do is we want to note, hey, how did that item get funded? And so the fixed asset fund was able to buy the equipment through funds from the general fund. So we credit any investment in the general fund revenues. In part B, so several years ago, equipment costing $15,000 was acquired with general fund revenues, and it was sold for $6,000. The proceeds belong to the general fund. So for the general fund, it's going to receive cash of $6,000 and other financing sources. So it's going to get account for the revenue in other financing sources, sell equipment for $6,000. Now we have to take that asset out of our fixed asset account, and so we just reverse what we would have done when we purchased it. So we credit machinery and equipment for $15,000, and then we debit the source of where we got that money, which was the general fund originally for $15,000. All right, in part C, so earlier in the year, a citizen donated to the city land appraised at $100,000, and so they're going to do a library. They're going to pay for that. So at year end, the building was 2/3 finished with cost up to date of $300,000. So we want to record that in our capital projects. So in this one, there's nothing happening in the general fund in this situation, but we do want to record land, so we debit land, and the source of that is donations, so we credit donations. And then for the building, we want to book construction in progress as we work on it, and so we got $300,000 to date, and then again, the source of that is donations. In D, we have a snowplow that was purchased from the general fund for for $92,000, which represented a cost of $110 less a trade-in of $18. And the old snowplow originally purchased for $66,000 from the special revenue account. And the snowplow had not been encumbered. So first, in the general fund, we're just going to record that we spent $92,000. So we owe expenditures and then cash for $92,000. And then in the fixed asset fund, we want to reverse out the equipment that we traded in. So that was the machinery and equipment, which was originally purchased for $66,000, and then the source was the special revenue fund. And then record what we actually bought, which was machinery and equipment, for $110, and the source of that was general fund revenues.